Please welcome our next guest, Nicolas Cary. Because actually, Nicolas, nobody knows this, but he's half French.
C'est vrai?
Nicolas, do you want to introduce yourself in French or in English?
Oui, d'accord. Je vais pratiquer un peu de français aujourd'hui, mais après ça, on va pratiquer en anglais. Mais ma mère est française, était née ici en 1945, et après ça, elle est démarquée pour New York. Et moi, j'ai jamais vécu ici, mais j'espère venir plus. And now in English. It's really wonderful to be invited to this. I've been coming to Paris Blockchain Week for a long time, but I actually think these types of events are actually where the better conversations happen. That's all about promoting sponsors and doing all that marketing work, which is important, but the real work is being done by the companies that are building things, and I'm really grateful to be spending some time with you today. I'll share a quick introduction to blockchain.com. We're now almost 13 years old, which makes us a very old crypto company. And we were founded in 2000. Our birthday, we say, is the day we registered the domain. So originally we were known as blockchain.info, which was an old web project that basically built the first block explorer ever for Bitcoin. And at the time, there were 200 or 300 people in the world that cared about this stuff, and we used to just go to the bitcointalk.org forums and listen to what people wanted to see, and then we would build it and launch it on blockchain.info. So we registered the website on October 15th, 2011, so very early. And at the time, we didn't know if anything that we were going to be doing was going to be legal or illegal, and it was not clear, and we were very paranoid about those things in the early days. But we were founded in York, in a little town in northern England, which always liked having some symmetry because obviously there's always sort of this like, New York is going to be where all this shit happens, and of course, that's not the case. And it's happening here in Paris, and it's happening in Singapore and Dubai and all these other jurisdictions, which I think is really, really fascinating. I mean, crypto is built on, and forged as a $1 trillion asset class by young people all around the world that just rejected the status quo and said, we hate this other system that's parasitic, that rent-seeks, that takes our capital and abuses our relationship with our money, and then they constantly fuck it up. And it's funny to me that we're now over 10 years into this work, and we still have a long way to go. But I do think it's important we take a few moments to really be celebratory about what we've achieved. The fact that, so my wife works at BlackRock, which is kind of funny. So my household is highly hedged. To hear her boss go on TV and talk about crypto being an informatics asset class is a huge step for us. And I just think about the next 10 years and all of the opportunity there will be for everybody working in this industry to forge better relationships for people with their money. It's just, it's the most important work we can be doing. But we always need to remember really the foundations of it, which were we have to decentralize these tools as much as possible. It's so important to provide wide market access. This isn't just about rich people in New York or venture capital guys in Silicon Valley. It's at the end of the day, we need to build a better economic pie, a better economic system for everybody. And if we do that, we'll have some really, really good outcomes with our life's work. And so to me, that's really one of the things I'm deeply passionate about, and been working on it now religiously for 13 years. And so it's been a long journey, and there are ups and downs. And I just want to acknowledge that we're experiencing kind of a good moment right now as the market is doing nicely. And that's because we've all put in a shitload of work to be here. And so this is a time to encourage teams to do everything they can to take care of their customers and more. But I know we'll dig into all this, but I just want to provide sort of a summary of the company's history, because we were founded in Europe, and then there was this little Brexity thing, and then we are now really kind of investing more in Europe than are even where we were founded originally because of the changes in the market structure and more. But I'm very bullish on France and Paris in general. There's always been a curiosity in this city to explore new things, to build, to test, and I see it really, really palpably now. It reminds me of London in 2012, 2013. The Olympics were happening, there were tons of startups, capital was coming, fintech was raging, and it was just a surge was happening, and you had Revolut founded, we were founded there, we had Monzo was founded, all these big companies all at the same time. And that moment is really, I see it here in Paris happening again, and it takes a whole bunch of stuff to come together to make that possible. But it's happening here, and I'm just excited for Paris for it.
And it's exciting to hearing you mentioning the Parisian ecosystem, and because you started in the UK and now you think actually Paris might be one of the center in Europe for crypto.
Without a doubt, yeah. And I see it both, with your company and others that are just leading the way here and really putting a big flag down in Paris. And then they should be. Like, Paris is this crazy intersection between art and culture and history and money. And that's also what crypto is. That's crypto's story, right? And it's digitizing all of that stuff. And so it makes a lot of sense that it would kind of come home and find its cultural, maybe sort of soulful roots in France. And it makes sense to me.
And you mentioned you're in crypto and you launched blockchain.com 13 years ago. You mentioned different cycles. How, and now we definitely maybe in a more bullish or kind of a upward cycle. How did you manage all these cycles since 13 years?
Yeah, so it's funny. I think a lot of founders or people that build businesses, they seek role models in their lives to kind of be like, well, maybe if I stick it out, I can kind of be like this person later in life, or someone who's inspirational. And people in finance that have worked in traditional finance for their whole careers will have like one or two things they talk about as like a crucible moment, like the dot-com bubble, or the sovereign debt crisis, or the great financial crisis. They worked at Lehman and it was a shit show, or whatever. Like in crypto, that seems to be happening every 3 or 4 months. And so like it's really intense, and the volatility across the markets has been very difficult. And so when you're watching your company's metrics go from 10 to 100 and then back down to 90 and then to 20, and then there's just like this extreme variability in market conditions. It is really not easy to cope with that if you're sort of used to kind of a smoother type of environment. And so it's not for everybody, to be honest. And one of the things I always talk about with our new joiners, so every single person that comes into blockchain.com gets an onboarding, and I tend to run those. And I have this, I don't have it with me, a presentation, but I have a slide in that presentation that just shows sort of the adoption curve of Bitcoin, bull cycles and bear cycles, and the real logarithmic difference in the amount of volume and the amount of activity that happens at each one of those cycles. And I always draw an X on the downward side of the cycle, and I say, you might be here right now. You might be joining the company, and it might slide for 18 months. And your parents are going to call you and be like, you're an idiot for joining a cryptocurrency company. All your friends are going to say, I told you it was just a scam. And your grandparents are going to send you every article they ever found on Le Monde that just says it's shit. And you have to sit there and take all that. And then when it turns around, you have to humbly say, I've been working on this, it's important to me, and now we're doing well, and this is why I was working on it. And I think, like a lot of things, you can be deeply passionate about it when you're young and sort of firebrand and punk, basically. And as you get a little bit older, your perspective widens and your aperture increases. And what we're doing is going to take more time. I thought we'd maybe be even further along than we are today, but I'm also proud of all the work that's been achieved by the industry. And so I guess what I'm saying is, like, you have to have a longer term time horizon. Like, if you're in this for the short term, you're going to fuck your customers over, and that is going to be bad for everybody. And so think about what you're doing, both in your career and if you're a founder of a company, as like a long-term, contribution to all of this. And if you do that, then I think you can come to terms with the ups and downs in the day-to-day. But it's very stressful, and it's really hard as a founder and CEO. Like, I would ask you the same question, how do you do capacity planning when you don't know if in 18 months you're going to have 500 billion AUM, or whatever, locked up in Kiln, or is it going to be?
I would love 500 billion.
Yeah, so shoot big.
Give it to me now.
Yeah, so, or is there going to be a huge retractment? Is there going to be regulatory, burdens put on you that make it very difficult to do business? And sometimes you just don't really know. And so,
That's right.
For companies, maintaining some adaptability and flexibility in our industry especially is particularly difficult. And so, people that work in traditional finance, a lot of them get excited about coming into crypto, and they come and join our types of companies, and like the culture clash is so dramatic. Like, some of them survive it, and they're great teammates, but I think it's very difficult for them.
So you think curiosity and flexibility for a TradFi person, for example, moving into a crypto company is key, otherwise it will leave in the next 3 months?
Yeah, I think we've seen it, so. Yeah.
You mentioned about like different cycles. One of the pivotal moments for a platform, for an exchange, was FTX in 2022. How did it impact blockchain.com, and how did it impact your clients, your products, your vision, your strategy?
Yeah, so goddamn. 2021 was an astonishing year. The whole market is surging. Coinbase has the biggest IPO basically of any tech company in years. Huge outcome. It sort of looks like the public markets are now, pricing this business model. It's understood. And then, you go into 2022, right off the peak of the all-time high for Bitcoin at the time, and the tech equities market starts to collapse. People don't remember, but like PayPal was down 90%. This is a very mature company. And this happens, kind of one after another, and then all of a sudden the crypto volumes start to slow down as well. And not to take everybody back through the traumatic year that we had that year, but it was particularly horrific. You've got all that going on. You've got the Terra Luna collapse. You've got 3 Arrows that goes down. Those guys take out like 10 different billion-dollar companies. It's just not clear when all of them died, but they all died, and then it took a little time for everybody to sort of acknowledge what had happened, but it was Voyager and Celsius and more, and any one of these would have been like a really difficult market structural problem to navigate, and then we had 5 or 6 of them as an industry in a row. These are like Category 5 hurricanes, just one after another. Self-inflicted or worse because of actual fraud, and then it all gets capped off in the end with the absolute scandal of FTX. And so there's my personal take on it, which was like, when you work in an industry for 10 years and you're deeply passionate about building the tools to help basically liberate people's relationship with their wealth, build a bigger economic pie, do it for those reasons that I think a lot of people get into crypto in the first place, which is to make a better economic system for everybody. And then to watch a guy take all the things that were precious about that and vandalize it at such an extraordinary level, and then destroy the trust that had been built. It was devastating, heartbreaking, and on just a personal motivational level. And then you still have to get up the next day and you forge on because you believe in what you're working on, and there are always going to be bad people and bad actors out there. I think the magnitude of that one though was really shocking, and it was shocking because they had the deepest bench of all the right investors you could ever want. They had all of the celebrity you could ever surround yourself with, and no one was really paying attention to what they were doing. And it's still crazy to me from a diligence perspective. They had no risk officer. They had no board of directors. I have a very, very renowned board of directors. It's a lot of work to put those types of personalities around your company and to have them advise you and to deal with all of that. But there's a reason why we've structured things this way over hundreds and hundreds of years, is oversight and risk management, at least in a traditional company. That's not the same for protocol projects or other things. But anyway, I think it was no sugarcoating it. It was a huge setback for our space in terms of consumer trust, which is on everybody to work to reestablish. And one of the things I care a lot about when I talk to entrepreneurs is ultimately all of you have to build things that people want and find useful, and you have a sacred relationship with your customer. And it's like a do no harm principle, like a Hippocratic oath of business is not screwing over your customers. And so when those kind of things happen at an industry level, it's really painful for everybody. And so I guess in short, it was reputationally difficult for our whole industry. No one was able to escape what happened with the FTX collapse. However, I think if you consider how horrible of a year 2022 was, you look at 2023, basically the asset class basically recovers, which is extraordinary. Consider just how violent all those things were in the market, and then it actually comes back. And so crypto has been tested over and over and over and over again in the most hostile environments possible, in a regulatory sense, in a technical sense, from malicious actors, from state intervention, all of it. And it's here today, and it's holding strong. And that's because of its foundational principles, primarily around decentralization and a lack of individual control over the apparatuses of this thing, because humans cannot be trusted, apparently, over large amounts of very precious information or value without compromising their incentives. And it's we've witnessed it forever, and this is why the invention of the blockchain is such a big deal. And so, from a first principles perspective, it's like leaning into those things as we go into the future. We need to remember to stay a bit punk, because the seduction of control and custody and management over people's information and value is always there, because it's easy to rent, seek, and take those things. But we have to remember why we're here in the first place.
And you mentioned stay a bit punk. One of the movement we've seen after FTX is custodial setups from non-custodial setups from users in general. How did you adapt to this? You have two different kinds of products. Did you see this happening, and how did you follow the users along this journey?
Yeah. So what's interesting about this is blockchain.com started off as a non-custodial wallet predominantly, and so we're sort of early, and that was really important because for most people in 2011 to 2014, 15, really before Ethereum, we were sort of the most recommended non-custodial wallet in the world, which was a very good vintage of crypto people to have onboarded to your wallet. What's interesting though is that highly fanatical crypto people that really care about self-sovereignty and self-custody are not the same as the sort of newer adopters of crypto that just want to have more access to different cryptos themselves and want a simpler interface, want to onboard more quickly, and don't want the responsibility of self-custody. So what's interesting is we started off self-custodial and have gone and built both options within one experience. So we have a self-custodial or DeFi wallet, and we have an account-based infrastructure for people that want that too. So we call it a super app. It's one experience that has both. Coinbase is going the completely opposite direction, which is they started off as a fully account-based custodial infrastructure system and are now desperately trying to get into the DeFi space. And I actually think that's probably what's going to happen across all of the kind of major financial and crypto services, is that there's kind of like wherever you started from, you're going to kind of probably run toward the middle of the opposite. And I think that'll be good because it'll give consumers more choices and options, and generally harmonizing of UI and UX makes it easier for people to navigate these things. So I think it's good, but it's still more work.
Right. And you mentioned DeFi. Why? I mean, having a wife at home that is working at BlackRock, why do you think DeFi is better than sci-fi, and how, as blockchain.com, do you interact with DeFi in general?
Yeah, I mean, we have a whole team that focuses on DeFi work, and it's everything from supporting protocol projects to listings to building smart contracts to do everything from decentralized exchange to more. And so there's that body of work. For us, we're trying to build a comprehensive sort of crypto experience, and I know that sounds a bit high and mighty, but we're trying to do a little bit of everything, which is make it the first place that people can go to hold on or buy some crypto, to trade, to explore DeFi. And then we have a whole bunch of work we do with institutions to help sort of more complicated participants in the market do things like list, market make, do trading and more. And so we do that all through the blockchain.com experience.
Right. And DeFi started with Ethereum.
Yep.
And then EVM chains, L2s, L3, L25 these days. But
it's going to be great for consumers.
You will have to support all these chains, man. And then Solana, but something that has been quite exciting lately, and as an OG, 13 years more in crypto, we've seen this ecosystem evolving, is the Bitcoin ecosystem.
Yeah, and I'm so glad you get to ask me this, because everyone's always sort of talking about the next new exciting exotic thing, which is fine, but let's go back to the baby, the original one. And I think Bitcoin really struggled at first, and then sort of found its product market fit as being this sort of digital gold, and then never really nailed what the promise was, which was peer-to-peer electronic cash. If you look back at the reasons why it was created, it was really something around those things. And right now, finally, I think there's innovation happening on Bitcoin that really left and went into all these other communities. And it's not that it's come back so much, it's just that it took forever to get basically the development community to create consensus to do anything on Bitcoin in the first place. And so now it's happening. You're getting basically high capacity transactional capability on the Bitcoin network. You're seeing NFTs on the Bitcoin network, and they're more popular than the ones on any of the other networks. And so it's interesting to me that we're now sort of in this potential world where a lot of new breakthrough innovations come back and use the most hardened crypto network to basically securitize things and then provide sort of alternative experiences for all the other stuff. So, I'm encouraged by it because there are millions and millions and millions of millionaires because of Bitcoin specifically. And they want to create more tools and wealth and tools that are useful on their favorite crypto protocol that made them wealthy in the first place. And so, I would say, pay attention to that and don't discount it. Anyone that's ever sort of counted Bitcoin out has made poor decisions in the long run. And I'm impressed by, obviously the Ethereum community. I was in Denver for ETH Denver a few weeks ago. It's a huge event. There were 30,000 people that flew in from all over the place to my hometown in Colorado, which was not known for technology and known primarily for the Western Stock Show, where people bring their wild animals together and then judge them. And so it's pretty funny to see that happening. The amount of development in Bitcoin was particularly interesting.
Do you see an analogy with wild animals and Eigenlayer, which was a...
Yeah, exactly. I saw there's also all kinds of ones. There's bear chain coming out and more animals. So anyway.
Yeah, that's right. And I mean, one of your mission at blockchain.com was crypto adoption, right? I think we have, 450 million, maybe 500 million crypto users today. That's the trillion-dollar question. What's going to be the billion users use case to you?
Yeah, I love this question, and part of it is I'm not sure yet anymore, but I honestly think the answer is really in the room here, which is it's up to the builders to go create bigger market access. And so if it's NFTs or if it's Web3 and gaming for real this time, we're partners with Heroes of Mavia, which is a Web3 game. They've got hundreds of thousands of actual daily active users. And so there are some of these things that we were talking about in 2021, those investments were put to work, and we're sort of starting to see the fruits of some of that stuff coming together now. And so, my personal perspective is, in 2011, 12, 13, 14, I used to set up every single person I could meet with a blockchain.com wallet. And I would send them $20 to $50 each time because I wanted them to experience what it's like to just move money instantly between two non-custodial wallets on chain. And that would always sort of click the lights for people to go, oh, I don't need a bank, I don't need a Forex market, or I don't have to do anything, I can just move money over the internet like that. And now there's hundreds of people that have their blockchain.com wallets that were, they used to give out maybe half a Bitcoin, and now that's worth a lot more. And so people frequently send me, customer support questions like, I can't remember how to get into that thing, or I lost my phone, what happened? I'm like, oh, Sonny, I'm sorry. But the real truth is that it's network effect money, right? And so if you want to see 1 billion people with crypto, everyone in this room needs to go set up 5 people with a crypto wallet this year and tell them that if they want $20 each, then they need to do it again. And if we all do that, actually, we will triple, quadruple more of the network in the next couple of years. And so it's just that simple. It's just go set up everybody you can meet with a crypto wallet and send them a little bit of it. And we need to be more generous as a community, honestly. And it's not just about throwing huge parties in London with champagne or whatever. That stuff doesn't matter that much. Put it in the hands of people. Let them really experience what it's like to beam value over the internet without intermediaries or custodians.
I think you hear the message. Go and set up
go set up wallets. Use whatever one you like, but especially blockchain.com.
To your mother, and if she loses her 12 or 24 words, tell them to go and
just contact me
and support
at Nick Cary on
customers.
Twitter. Yeah.
And I mean, we are pretty excited about stablecoin in general.
Yep.
That's also kind of a day about stablecoin as we're launching a stablecoin rewards yield product. How do you engage with stablecoin in general? You manage, like you mentioned, moving from money A to B.
Yep.
What do you think about stablecoin in general, and what could be bring into this ecosystem to make it bigger?
So I was in Argentina 2 weeks ago, and I was recently in Nigeria. The opportunities in these markets where there's just crazy inflation and a total lack of trust in institutions is a perfect fit for stablecoins. People want to be able to hold on to a store of value of some kind, and they love dollar tokens, and that's really a huge story. To me, this is a sneaky way of getting them adopted into crypto in general, and there's really no debate really from, I would say, even regulators or institutions that's supporting basically dollar tokenization, especially, or potentially a euro stablecoin someday or a pound stablecoin. Everyone thinks that's actually a good idea. And so the good news is I see really huge pockets of adoption already happening in markets where there's loads of young adults that need access to tools to control and exchange just payments on a day-to-day basis, and they're already adopting it. And so I think stablecoins are going to be a very powerful and useful rail broadly for the wider crypto system. And I did not believe that at first. I thought stablecoins were completely pointless and stupid 4 or 5 years ago, and I've come around completely.
You were believing in Bitcoin more.
Yeah, I was obviously a bit of a maximalist, but as I've gotten older, I've tried to change my perspective. I used to get dressed up. I would never wear a suit coat, and now as I get older, I'm wearing this kind of crap more often. And like, it's just, you become the thing you hate if you just get old enough. It's like this crazy cycle.
But be careful of this suit thing. I heard it's getting worse.
Yeah, I think it might be. So.
I want to give a chance for the audience to ask maybe 1 or 2 questions, and your schedule is pretty packed. So, is there anything you're excited about in the crypto ecosystem in the next 5 to 10 years?
Yeah, I guess if I could summarize just what I've been witnessing around the world and just share it with you guys is, we've been through a lot. I just that importance of taking care of the customers at the end of the day is just so key. So do things that are useful for them, and it'll all work out. But there's some big themes this year that I think are huge. I mean, we're going to have a happening moment for Bitcoin in the next couple weeks. Might happen on 420, which is particularly exciting, and would just be so poetic. Who knows if that'll happen or not? But a big deal. It really changes the supply dynamics in the market, and the ETF launches are a huge deal. Crypto was built on the overcaffeinated imaginations of a bunch of internet nerds, and now they're selling this whole asset class to the boomer generation and the wealthiest pockets of capital on earth. And so that's a big change in the market structure, and it's going to be buying up a lot of crypto in a passive allocation manner, which is huge. Another one that it's really, I don't know what the impact's going to be, but I guarantee you in 5 years we'll look back and go, we underestimated how significant it is. But it's the merging really of the vanguard of the AI movement and crypto. And they've been sort of not paying attention to each other until very recently, when the United States and other global regulators started looking more carefully at AI and are thinking, well, this thing needs to be treated more like nuclear development or weapons or something like that. And if we don't decentralize immediately, basically access to the underlying model development and the data sets, we're going to be in a real world of hurt, and it's hugely problematic. And so the real sort of, the fight that crypto sort of won in a lot of ways to decentralize control over custody and value creation, meaning we don't have institutions destroying our money anymore. We have an alternative. We need to have the same thing for AI. We cannot trust these large-scale platforms that are going to commercialize this stuff against us. It needs to be highly decentralized. And so we have to build tools as quickly as possible to do those things. So I'm excited because I actually see that work happening, and an alliance has been really forged between the development community, especially on the open source side of AI, and taking lessons from what crypto's experienced over the previous decade. And so those two things coming together is a big deal, because you can imagine in the not too distant future, all the work that's happened around smart contracts and oracles and the rest, merging with more AI, and AIs are not going to be able to set up bank accounts. They're never going to go through a KYC process. They don't have provenance or any of that stuff. And so they're going to set up crypto wallets. They're going to use stable coins. They're going to pay for all their energy consumption and upgrades and whatever they're doing using crypto. And so to me, it's not a coincidence that these things are happening at the same time. These are foundational things that have to exist together in order for the next sort of adoption and level of increased usage to happen. And so I think in 5 years, we'll look back and go like, wow, that was the AI and crypto sort of brotherhood that was forged in 2024 was, we didn't expect how impactful that would be, but I think we might in a few years. And so those trends, I think DeFi on Bitcoin is a big one this year, institutional adoption again. I think the work you guys are doing to bring staking to everybody is a huge deal. And so I'm really encouraged. And then look, Europe's passed a comprehensive regulatory package. Is it perfect? Absolutely not. No regulation is perfect, but it allows everyone to just move on And it's also going to allow all the traditional financial service providers in Europe to start offering crypto products to all the people that hadn't bought in the first place. And so you're going to see like totally different type of competition in the market. And so, I'm very encouraged right now. That being said, I'll caution this, having been through 4 cycles before, the good times do not roll. They do not last forever. There are bear markets and bull markets, and you really have to expand and grow your market share and build great products when things are going well, and then manage your cost structure and your risks when the market is not in that condition. So that's what I've learned after 15 years, 12, 13 years.
Yeah, I love it, and I love what you say about AI. I think it was Ben Horowitz was saying like AI usually centralized power in tech, and crypto is here to decentralize it, even for AI.
Yep.
Yeah, and I'm also excited about the ETF because I'm sure now we have reconciliation at home, between the crypto OG and the BlackRock.
Yeah, it's always a
wife.
Spiky conversation.
So yeah, I want to give maybe 1 or 2 questions to the audience. Oh, we don't have time.
I do have to run. I'll take one quickly because
one question over there.
Enthusiasm.
Oh, well, if we're tight for time, it might be tough, but thank you so much. This has been an awesome chat. So I want to, Nicolas, someone with your experience, I want to bounce a quick theory off of you and see what you think about it.
Uh-oh.
I'm in the Stacks ecosystem. We're Bitcoin L2.
Yep.
And what's up, Laszlo? And our creator, the original creator of Stacks, this computer scientist named Munib Ali.
I know Munib.
Yeah, I figured you did. He's kind of an OG like yourself. Anyway, he's been trying to build on Bitcoin since 2013.
I think his time has come.
And he came up with a theory, probably in like 2015, 2016, which is essentially, people call it Munib's law, and it's essentially, if it can be built on Bitcoin, ultimately it will be built on Bitcoin. And so you could see it with the NFT market right now. As you said earlier, it's happening. It's bigger than Ethereum. And if you look at the L2s on ETH, it's probably like 10% of the Ethereum value-ish, 40, 50 billion value in L2s on a $400 billion of the foundation, which could imply $100 to $150 billion market for Bitcoin L2s, if you believe in Munib's law. So what do you think about that?
Look, I think Munib's time may be here. Like, he's been a long-time builder and quietly just letting his work speak for itself. I wouldn't discount all the development that the Ethereum community is working on as well, and even Solana. Like, I had them written off after the FTX stuff, and that community has rebounded really seriously. They're in their own. A lot of these communities do not actually talk to each other, and so they have a worldview that is a little bit isolated, but they do care about their work, and they're trying to build useful things. And so the competition is good, but I never discount Bitcoin because it's what forged and really created the inspiration for all of this other stuff. And so to me, I am excited about using the most hardened digital asset in the world with the most secure blockchain, which is inarguable from the time it's been running to today, and it has clearly an incentive model that's very difficult to break. We don't see that on some of the other protocols, and frankly, they haven't been tested as hard as Bitcoin has. And so that's my short answer to it. Don't count it out, but competition's good. All right, thank you so much.
Man. Thanks.
Great to see you.
Thanks.